legislation will be called the Income Tax Act of 2025 and is expected to take effect from April of 2026 onward. The proposed law replaces the term previous year as mentioned in the Income Tax Act of 1961 with tax year. It also eliminates the concept of assessment year. So no more assessment year, you have the tax year, and those are some of the cosmetic changes that we know of so far. The income tax bill, as I mentioned, has about 536 sections, 16 schedules, 23 chapters and about 622 pages. What is the new IT bill all about? Let's talk about that. My colleague Karthik Malhotra here with me. Karthik, apart from all, the conversation around tax bill now reduced by at least 21% from 800 odd pages to 633.
Yeah,
what more do we know?
I mean, honestly, I think from 823 pages earlier, the new bill is now 622 pages. So yeah, I think the finance minister has lived up to the commitment that the income tax bill will be shorter by about 20 to 25%. But beyond that, I think the language still seems pretty much similar to what I remember of the old Income Tax Act. And even in terms of changes in assessment year now being called tax year, previous year now being referred to as financial year, of course, I think it is likely to give some clarity to individuals who want to file taxes themselves and will reduce ambiguity. But beyond that, if you were to really go through these multiple chapters, 23 of them, multiple clauses and the sub-clauses thereof, I think anytime there is a dispute, you cannot DIY. You will still need assistance of a tax lawyer or a chartered accountant to help you navigate through the multiple complex layers
and
of
we do
taxation.
have a chartered accountant here with us. Joining us on the show is Richa Sahani, chartered accountant, Walker and Chandikot and Company. Also with us is Karan Jyot Singh, partner Lakshmi Kumar and Sridharan. I want to come to you first, Richa. What are you making of what's coming out from that bill? It was supposed to be easier. Karthik here suggesting it's as complex as it was last time around, but what majorly changed?
Well, I think the FMS to that extent lived up to what the expectations were in terms of removal of the complicated provisos and explanations. Yes, they are still there because to make the law understandable to people, they have now taken the form of subsections. So to that extent, that simplification has happened. We see a lot more tables and charts. For example, in the exemption sections, there are quite a few of the formulas which seem to be there, and this is on the first cursory glance. As you rightly pointed out, there are about 536 sections cut down from the 911 so far. There are a lot of redundant sections which have been removed, and at the first blush, what I can talk about is the FBT sections which used to be there. Those have gone, so that kind of takes a big sizable chunk away from the act. Also, there is a use of shorter bit of sentences. There is no overall change in the construct of the act in terms of the number of chapters. They deal with similarly the 5 sets of income categories which remain the same, and there is no additional tax as promised by the FM. So I think to a great extent it is in line with the simplification, the removal of redundant sections. But yes, the subsections are there which are in lieu of the provisos and the explanations.
So subsections have been shortened. Some of the redundant sections, we've gotten rid of them. Before I come to Karan Jyot, let's quickly talk about deductions, because I think that interests all our audience.
Absolutely. I think if you look at Chapter 4 of the new income tax bill, which we reiterate will be tabled in Parliament tomorrow, and right now we just have an advance copy of that, and we expect this to be the real bill which will be presented in Parliament tomorrow. But that disclaimer aside, if you look at Chapter 4 is something that concerns all of us, the middle class, the tax-paying citizens of the country, which is pretty much doing the heavy lifting when it comes to growth and direct tax payments to the government of India. So if you look at the deductions, I find absolutely no changes in the deductions. Maybe Karan Jyot and Richa can help us understand if there is any change. But if you just look at some of the 13 heads under the deductions, So any sum paid by the assessee as tax on employment as per Article 276(2) of the Constitution, the entire amount is considered as deductible from the calculation of the income tax. No change there. Standard deduction, if you're opting for the new tax regime, continues to stay at 75,000 rupees. This was introduced, if I'm not mistaken, in budget last year, not 1st of February this year. So 75,000 of standard deduction on the new tax regime. If you're opting for the old tax regime, it continues to be 50,000 rupees as standard deduction. Now, there was some rancor on gratuity, and even if you look at the multiple subsections on gratuity, not too much change. So gratuity received in the event of death, so death cum retirement gratuity, the entire amount is deducted when tax is calculated on the income received by the deceased. Now, in addition to that, when there is payment of retiring gratuity received under pension code of regulations, again the entire amount is tax free. Gratuity received under payment of Gratuity Act 1972. Now, this is something I'm not very clear on. Maybe Karanjot can help us. That amount received as restricted to the amount calculated as per provisions of Section 4.2 and Section 4.3. The formula for gratuity again remains the same. It is the average of the last 10 months of salary drawn, and 50% of that becomes your gratuity amount. So it's 1/2 into last drawn, average of last drawn salary for 10 years into number of years of service. No change there as well, Shweta. And of course, payment received by an employee of the central government or state government for leave encashment, also the entire amount received as leave encashment is also completely exempt from taxable income. And yeah, broadly, I think nothing really changes. Your tax outgo remains the same. And in terms of language clarity, I think the experts can help us understand. But as far as the deductions go, as far as the calculation of the taxable income goes, I think there may be a little more clarity, but there's definitely no change to my understanding.
Karanjot, would that be right to suggest that gratuity especially, there's no change there? Gratuity payment under the Act fully deductible on retirement, incapacity or death, and other gratuity deductible up to 75,000 or salary, whichever is less. Any changes that you're looking at there?
Yeah, thank you, Shweta, and thank you, Karthik, and good afternoon to all the viewers. I think firstly, I just wanted to say we received this copy of bill recently just from News 9. We've been told that this is there in the public domain and the government is yet to introduce the official copy of the bill. But I think basis the copy that has been shared with us, it does seem that the calculation of the non-taxable gratuity largely remains same as is there in the existing act as well.
All right, nothing much changed there as far as gratuity is concerned. But pensions there, Karthik, any changes there in pensions? What does the bill say?
No changes in pension as well, Shweta. In fact, I'm just trying to find that particular section on pensions. But from what I remember, payment of retiring gratuity under the pension code, again, the entire amount is tax-free. But pension, to my mind, is taxable, and tax is paid on pension, both state government and central government employees. But I'm unable to sort of, lay my eyes on that particular section in the new tax bill. Richa, pension continues to be a taxable component?
From a cursory, the first cursory look, it appears to be the same. As I mentioned, there doesn't seem to be any change in the overall financial outgo for a taxpayer. The idea was simplification, a little bit of rejig of the sections, and overall that seems to be the theme. So there doesn't seem to be too much of a change anyhow on any of the charging or the exemption provisions.
Okay. Karanjot, I want to just quickly draw your attention to something we were talking about a few days back as well on the channel, and this was the entire campaign that the government has tried to build around building trust and transparency in the system and faceless assessments, and really wanting to put that faith in the process of wanting to believe what the taxpayer is saying up front. Now, in terms of litigation, in terms of penalties, in terms of pretty much anything that comes by way of slipping up on making tax payments in time or filing wrong returns, is there any change that pops up immediately after you've taken a cursory glance at the 622 pages in the last few hours or so?
No, Karthik, I don't think there have been any changes. See, just taking cue from what we discussed during our earlier conversation, one thing that is there with this existing government is, I must say that this is a very commendable move. the fact that they tried to bring in a new act to simplify the provisions. And even if you look at the statement of objects, they are very clear that the act is not intended to really be groundbreaking in terms of introducing new provisions at this stage, but it is intended to make the language more lucid. And it does seem on a cursory reading that they are achieving that purpose. In terms of how the assessments currently take place and how the appeal mechanisms are there, I think the provisions are very clear. In fact, I was also going through the repeal provisions, which do say that the faceless assessment scheme as it existingly is there, the fine print suggests that that will be retained even under the new Income Tax Act.
All right.
Having said that, my experience with this government is that they have their ear to the ground. I'm sure this act comes into effect from 1st April 26. That's the tax year. So they're doing away with the concept of assessment year and previous year. There'll be one tax year. It seems that the act comes into effect from financial year 26-27. So the industry will have one full year to raise their concerns and expectations with the government. They have their ear to the ground. My experience is they do listen to the industry, and if there are some benefits that the sector is looking at, I'm sure the government will be happy to sort of say how they can accommodate before the act becomes a law.
Right. So just one clarity before we move on, Shweta, if you'll permit me. Karanjot, the act comes into effect from 1st of April 2026 is something I've read as well. And now with the change in language, it is not going to be assessment year, it's going to be tax year. There's something you just mentioned again, which means that the income tax which will be filed for financial year 25-26, which begins on 1st of April 2025, is going to follow the sort of simplicity or the language or whatever clauses given in the new tax bill. But because you're filing your income tax a year later, that is when the tax comes into effect. Is that understanding correct? Or these clauses and the and whatever underlying themes in this new bill are, they will come into effect only from 1st of April 2026?
So yes, Karthik, the new code, as per the bill that you've shared with us, it seems that it is intended to come into effect from 1st April 26. So all the provisions of the new code, they take effect from 1st April 26, meaning thereby that for financial year 25-26, at least the existing Income Tax Act is supposed to govern the charge. In terms of the collection of taxes, maybe the new code will take over. Obviously, we'll have to get into the fine print of the new proposed bill to then understand the nitty-gritty surrounding the collection and recovery and assessments once the income is earned in financial year 25-26, but that seems to be the prima facie idea as of now.
Right. So one more line of clarity there, which means, see, assuming that the tax calculation does not change and there is going to be absolutely the same liability that taxpayers have towards Government of India, specifically in cases of litigation or cases of arbitrage which may be on right now and appeals that taxpayers may have made, that means until 1st April or until 31st March 2026, the understanding of and the precedent set under the existing Income Tax Act are going to apply, and there's going to be no referencing to the new income tax bill, and cases that come into litigation potentially after 1st April 2026, that is when, assuming this bill passes through Parliament and the Standing Committee and does become an act, that is when this kicks in.
Yes, what you're saying, Karthik, seems to be the broad scheme. Yes.
All right. So every litigation and every assessment that comes under question as far as this year is concerned will still be governed by the existing Income Tax Act of 1961. The provisions of the new Income Tax Act will only kick in from April. So it will not be applied retrospectively.
Next year, not coming April.
Absolutely. Not be applied retrospectively. It will be applied prospectively from April of 2026 onward. But I think another interesting point that, the bill talks about is a charter for taxpayers, and to what Karanjot pointed out, that this government seems to have its ears to the ground. The taxpayer charter is likely to have taxpayers' right encompassing and giving them some sense of surety on what they can and to what extent they can litigate with the government. Let's quickly get in Richa Sahane back into this conversation. Richa, did you manage to have a look at what this charter is and to what extent it protects taxpayers?
Not really, but the fact is that there is already a charter in place for taxpayers. So I'm sure that it is kind of taking it a step further, while I've not really been able to go through the fine print. But the existing charter also gives a lot of rights and duties, both for the tax department as well as the taxpayers. to that extent. So to my mind, there will not be any significant change. It already codifies a lot of things which the taxpayers can expect from the government.
All right. And there's also a conversation around expanding the definition of digital transactions, cryptocurrency. I don't know if Karan Jyoti, you've had time to look at the fine print, but government is likely to codify what could come by the way of perhaps crypto laws in the IT Act.
Yes, as of now, basis the fine print that I have gone through, it seems that they've retained the existing virtual digital asset taxation scheme. Obviously, I'm yet to go through the fine print, and also addressing that point on the charter. I think I do agree that the charter is already in place, and that has served as a cornerstone in many litigation matters for the courts to decide as to how the executive authorities should be administering the Income Tax Act. The fact that they are intending to codify that within the Income Tax Act, I think is further a welcome move, because in that sense, it may have a further binding authority for the executive officers.
But to my understanding on your question, or rather the comment that that virtual digital assets, cryptocurrencies, etc. Yes, I think there is a definition from what the government understands of these virtual digital assets right now. But again, there's no change in the taxation. Obviously, because 1961, I think there was no internet, leave alone virtual assets like cryptocurrencies. But I think what I understand from a cursory reading of the bill again is that as it was announced in, if I'm not mistaken, 2023 budget speech by Finance Minister Nirmala Sitharaman, that cryptocurrency gains will be taxed at 30%, and losses on account of trading in crypto cannot be offset against the gains, and hence your tax liability will be on the gains and the losses will not offset that liability. So I think that is something which again continues to remain in this act. Shweta, another interesting table that I came across, and Richa was talking about tables. I think that is one simplification. We have tables, we have
more
enough tables to really glance from left to right and top to bottom, as opposed to a lot of passages to read through. So another interesting table is this entire definition of specific or specified persons, and this again is an interesting observation here that under the Hindu Undivided Family Act and otherwise, there is this definition of what a specified person and his or her relationship with the assessee is likely to be, or rather is. So an assessee in the capacity of being an individual, the specified persons are going to be relatives of that assessee, and there are definitions of relative as well. In the case of the company being an assessee, the specified persons liable for paying taxes or sort of appealing or litigating would be any director of the company or his relative as well. I think they missed out on the his or her, but it says his relative. Then in the case of a firm, a partner of the firm or its relative would also be a specified person. Plus then in the association of persons, which again becomes another category for assessment, in that member of the association or its relative again becomes a specified person. And finally, in the case of the Hindu Undivided Family, you have member of the family or their relatives again. So I think this relationship definition between who is liable to pay tax and who is a specified person to represent any matters arising out of tax litigation or liabilities on account of payment of taxes with respect to assessees has also been clarified in a fairly simple tabular sort of a format, Shweta.
All right. So that is as far as, what a Hindu undivided family and who is responsible for the assessment. But let's also talk about capital gains. That was a point of conversation, Karthik, since last year's budget, after changes were made to long-term capital gains, especially for real estate. Those changes were later rolled back. But I'm given to understand from what I'm reading at the moment, again, a cursory glance, nothing changes there as far as capital gains
is concerned. Right, absolutely. I think the definition of salary has been, or income has been fairly well defined, and that is something we were just flashing those graphics as well, and maybe we can pull those graphics back, that income has been divided into 5 heads. One of those happens to be salary. Then you've got rent coming in from property that you own, which gets added to your income. Any capital investments that you have made, appreciation, capital appreciation of that in case of liquidation, which means any proceeds, dividends coming out of those investments get added to the income. And then in addition to that, you've got the interest and any other income that supplements your salary. So within that, of course, these proceeds that you get by way of your investments, depending on the nature of that investment, the format of that investment, will be subjected to short-term capital gains tax or long-term capital gains tax, and the rates are pretty much, there's no change in the rates, which wasn't expected as well, which is something that we've been saying ever since we started talking on this subject, that it is just simplification of language. Arguably, simplification of language, it still seems fairly complex to a layperson like me, so I'm not sure I'll be able to litigate on my own if the need ever arises, and I will still need tax lawyers like Karan Jyot or experts like Richa to help me understand where I can really go ahead and build a case for myself. But beyond that, I really don't think in the case of investment-based taxation, short-term or long-term, on the instruments that you use as investments, there hasn't been any change in that as well.
Richard, would it be right to say, therefore, that the simplification of tax rules, the uncomplicated language, is not so much for the citizens, but rather for you, the chartered accountants?
Well, I would say that it works for both. There are several people now with the overall simplifications that have been happening in the past, and the e-filing, the pre-filled returns. A lot of people have been doing their filings on their own. So I think the tabulation, there are certain sections you also see the interpretation sections coming in. So definitely it is a step in the direction there where a large number of people can actually do their filings on their own. But yes, of course, chartered accountants and lawyers, I don't see them becoming redundant any sooner.
Another point I want to bring into the conversation, I don't know if it's relevant really, Shweta, to the income tax bill per se or not, but is the fact that technology which is supposed to enable this Saral e-filing and getting people to file taxes on their own. We've seen glitches with the income tax filing website about 2 years, 3 years ago, if I'm not mistaken, when the makeover had happened, and one of the leading IT companies was instrumental in that makeover of the Income Tax Act. But if I remember, Karanjot and Richa, you may be able to assist me with my recollection being factually correct or not, but I think one of the post-budget interviews or conferences that Finance Minister spoke at had actually hinted on the fact that that technology would be integrated in a way that your tax return form is pre-filled and you just need to cross-reference it, check it if everything is in place and submit it. But government websites and technology deployment to enable ease of filing taxes is something that has been letting citizens down. And I can say this with some degree of confidence, both for the income tax website at least 2 years ago, as well as the EPFO website, where DIY and the ease of compliance, ease of filing continues to be a bottleneck for citizens. So I mean, is that something which again should be prioritized by the government if it hasn't really been the priority so far? Karanjot.
So, Karthik, just speaking from my experience, I must say that the government has done a lot in improving the income tax website. I remember, say, about 5 to 10 years back, when, because the income tax forms were not readily made available to the taxpayers, the high courts had to step in and extend the due dates for filing tax returns to a point where not only are the forms made available before the starting of the tax filing year, but in fact, even in many cases, the refunds are being processed within a week's time. I must say a lot has already happened to make the system very seamless and smooth for the taxpayers. The pre-filing of tax returns is something that has been an agenda for this government. And in fact, they have been working year after year to make that even more seamless. So I do see, especially in case of salaried individuals, by the time you really go up to fill your tax return, almost the entire data is there. So at least to that front, a lot of professionals like us go out of job. But I do believe that the government is going in the right direction by making things simpler for the taxpayers. And I do believe that the entire technology and the infrastructure they have put in place is helping them in making the system more easier for the taxpayers.
Okay, Richard, do you concur with that? Is it really that easy for individuals?
I agree. The pre-filled forms are actually available, and whatever concerns are there, they are actually being addressed whenever they are brought to the knowledge of the government. And a lot of problems that I feel also happen because the filings happen just around the last date of the return filing. So there is a lot of overload on the system. There are a lot of glitches that happen on account of systems not moving properly that day. So a lot can also happen if there is some bit of staggering from the part of the taxpayers also. so that they do not have those challenges that they face on the last day. But to my mind, all the challenges that are being brought to the notice of the government are being proactively addressed.
Okay. Additionally, I think another interesting thing that Karthik bill points to is there's a reference to finance companies and financial units in context of dividends. We're suggesting here that this could have implications on financial institutions. Now, devil lies in the details, and we don't have details just as yet. We'll give our, experts time to go through the fine print, those 633 pages, before we arrive at a final conclusion on what's really changed for taxpayers as well as companies who operate as part of the Income Tax Act of 2025. Remember, the bill will be tabled in the Parliament tomorrow. After it goes through the Parliament and after its passage, it becomes an act and it will be implemented from April of 2026. We're tracking, of course, all those details here on News 9. Richa, Karanjo, thank you very much for taking time out for joining us on this special broadcast. And that's all we have on the show from Karthik and me. Thank you very much for watching.
Unlimited Life. Bookings open on 14th February. What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire